because sometimes you have to go back to the drawing board, admit that you're wrong, and reevaluate your positions. So I did a video on Tesla, and boy did the cult come at me like none other. Now, I respect the Tesla community and the cult following that it has, but guys, let's talk through some of these comments. And there's only one comment I really want to hone in on, as I think this comment really sums up what is going on with the Tesla crowd. Now, first and foremost, guys, I really do want to own Tesla, but I have to own it at the right price. If I would just buy it at any price, it's a good way to lose your money. Couldn't wrap my head around a 400 PE ratio, and I'm sorry if other people did, but a 46 PE ratio, if a company can maintain growth rates through a looming recession, is pretty interesting when we factor in other aspects of Tesla's business. But people are so focused that I'm not cheerleading the stock that they're actually really not even listening to the content that I gave. I literally said that the stock is an interesting stock between $90 and $120. Where is it today? It's at $149. And I gave an argument for a bull and bear case at these levels. I can't really give a bull case when the stock's pushing 400, but at 150, definitely interesting. Personally, I like it at 90 to 100. That's just me. Somebody else might have a different opinion, but that doesn't mean you dislike a video. I'm literally showing you how I'm arriving at these numbers. I'm not just pulling numbers from thin air. But let's just use the growth rates that the Tesla cult wants me to use. And that's 50% growth rates. 50% growth rates in a possible global recession. 50% growth rates when inflation is running high, meaning to build the car is probably costing more. Wages are rising, so there's more costs added. We have a strong dollar, so there's currency headwinds. We have high interest rates, so to even finance the car is costing a hell of a lot more than it did about a year ago. But this individual wants me to use 50% growth rates and just ignore all the other stuff that I just said. Now, if you watch the original video, guys, I stated that I'm cutting the growth rate pretty much in half because of all these things that I'm bringing up. The strong dollar, rates being higher, global recession, wages are being increased, cost of materials are more expensive. All these things are going to impact bottom lines, and therefore I lower the growth rate to build some safety in there. I hope this makes sense, but let's just act like none of that stuff's going on. Let's just ignore it all, guys, because who really cares what's going on? What really matters is that we got to pump the stock up, right? That's not what's important. What's important is cheerleading Tesla, guys, so let's cheerlead it. Let's give it 50% growth rates. We'll go 50% growth rates, and then we'll go 15% growth rates, and then we'll go 10% growth rates. I think the Tesla crowd will be happy with that. So let's just do that for now. And what do you know? It's a $215 stock. Wow! And it's trading at $149. So if I would have bought it at $215, I would be down pretty significantly in this position because I built absolutely no safety in there. Oh, and by the way, we can put a 28 multiplier on that because that's what it's currently trading for from an EV to EBITDA multiplier. So we got to put a 28 multiplier on that. And that's how we arrive at almost a $300 stock. And I would be down probably close to 50% if I ran my analysis like this, as most of you are probably down close to 50% in Tesla. So hopefully this makes sense, and hopefully you can see I'm trying to be unbiased and just give you guys what I'm seeing. I'm never going to be 100% right, but I try to factor in as much as I possibly can as the economic backdrop and interest rates, cost of goods being sold, wages, and a strong dollar are all headwinds we have to factor in. If you don't want to factor that in, then you should be buying Tesla at close to $300, and you'd be currently down 50%. And thank you to those that are actually invested in Tesla that really like hearing another side of the story. Being so biased is a very dangerous thing to be when you're an investor. I've done it numerous times. I've been wrong. And that's what a good investor does. They learn from their mistakes and they listen to others' opinions that might not necessarily agree with them because it gives them a different perspective. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.